Have you ever wondered if you could negotiate a lower balance on your tax debt? The IRS will occasionally allow taxpayers to settle their obligation for less than the full amount owed. This is called an offer in compromise. Now, there are 3 different grounds on which you can base your offer: doubt as to collectibility, doubt as to liability, and exceptional circumstances. Doubt as to collectibility is based on the taxpayer's financial situation and the likelihood that the IRS will be able to collect the full amount owed. Doubt as to liability is based on a genuine dispute over the amount of tax owed, and exceptional circumstances can include things like a terminal illness or a penalty assessment that was incorrectly placed on your trust fund. Now, it's important to note that just because you have a good reason for wanting to settle your tax debt for less does not mean the IRS will agree to it. In fact, most offers in compromise are rejected because the taxpayer doesn't have the necessary grounds for approval or the application is not done correctly. But that doesn't mean you shouldn't try. To submit an offer in compromise, you must first pay an application fee as well as an initial non-refundable payment. So before you submit an offer in compromise, make sure you have the proper legal basis for doing so and that you can afford the application fee and the initial payment. If you're unsure whether you have a valid offer or not, you can always contact the IRS directly. They'll be able to tell you whether or not you qualify, and if you do, they'll give you the necessary forms and instructions for submitting your offer. So, what are some of these exceptional circumstances that could warrant an OIC? Well, one common situation where the IRS will accept an offer in compromise is when a taxpayer has a terminal illness. In this situation, the taxpayer is usually able to provide medical evidence that shows they have a life expectancy of less than 24 months. When the IRS accepts a terminal illness as a qualifying reason for an offer in compromise, they will typically reduce the taxpayer's liability by 50%. Another common situation where the IRS will accept an offer in compromise is when a taxpayer has been assessed an incorrect trust fund recovery penalty. This penalty is usually assessed when a responsible person fails to pay employment taxes that they are responsible for collecting from their employees. However, the penalty can be reduced or eliminated altogether if the responsible person can show that they acted in good faith and that the failure to pay was due to reasonable cause and not willful neglect. If you feel like you have a good reason to apply for an offer in compromise, don't wait. Contact the IRS today and see if you qualify. You have nothing to lose and everything to gain. The worst thing the IRS can say is no. If you're looking for more information about offers in compromise, visit our website. We have a team of experienced tax professionals who can help you through the process. Don't let tax debt destroy your financial future. Take action today to get the relief you deserve. Thank you for watching this video. If you found it helpful, please like and share it with your friends. For more helpful tax tips, please subscribe.